And now, without further delay, let's begin today's event, sponsored by Thought Machine and hosted by American Banker. I'd like to introduce your moderator, and that is Janet King. Janet, you have the floor.
Great. Thank you so much. Welcome, everybody, and thank you for joining us today. I'm Janet King. I'm the Vice President of Research at Horizon, which is the parent company to American Banker. For banks undergoing a digital transformation and for banks that are about to embark on one, it can feel like a daunting multi-year journey that's often fraught with a lot of difficult decisions and a great deal of unknowns. In today's conversation, we're going to be drawing on results from research conducted by American Banker in partnership with Thought Machine to better understand how U.S. banks and credit unions are approaching digital transformation. What are they getting right, and where are there opportunities to improve? Our goal really at the end of today's session is to provide you with a new perspective on what your peers are doing and hopefully a better understanding of how you can build an achievable and sustainable digital transformation strategy. So I've got some great panelists joining me today. First, we have Brad Steele, who is the General Manager of North America and the Managing Director for Global Partnerships at Thought Machine. Welcome, Brad.
Thanks, Janet. It's a real pleasure to be here with Clay and Chad. I joined Thought Machine 9 months ago. Prior to that, I spent 10 years at AWS, and prior to AWS, about 18 years in banking with a handful of U.S. regionals across both commercial and retail.
Excellent. Well, I'm looking forward to hearing your thoughts on this topic. Also joining us today is Clay Adams, who's the CEO of Mascoma Bank. It's great to have you here today, Clay.
Nice to be here, Janet, joining all of you. Mascoma is about a $3 billion mutually owned bank. We're based in New Hampshire and serve communities in Vermont and Maine as well. I have been with the bank for 5 years in this role, and prior to that, I was an external board member and had a range of other business experiences, so bring a perhaps different perspective.
Excellent. Well, great to have that perspective with us today. And finally, we have Chad Ballard, who's the Managing Director and Head of Core Banking Technology at JPMorgan Chase. So thanks for joining us, Chad.
Yeah, thanks, Janet. Glad to be here and glad to hear from the panelists as well. I've been with Chase for around 3 years. Prior to Chase, I was with PNC, where I had responsibility for digital and core transformations. And then prior to that, 15 years at BBVA, were similar roles in core digital and open banking related transformations. So glad to be here with everyone.
It's great. Well, it's wonderful because we get the technology perspective and then we get the banking perspective from kind of two different angles in the industry. So I'm really excited to hear from all of you today. So let's get started. For the audience, I just want to provide a little bit of context on the research that we'll be discussing today. This was an online survey that we conducted among the American Banker audience during the second half of 2021. Our goal, again, was really to explore how well prepared banks are to advance their digital transformation. And more specifically, the survey explores how banks are approaching the modernization of their core banking systems, including some of the progress that they're making towards adopting next-gen core systems, their propensity to choose cloud-native core systems, and some of the challenges they're facing along that modernization journey. We had a total of 100 banking leaders who had knowledge of their organization's digital transformation strategy complete the survey. And those respondents included a mix of senior level decision makers in a variety of roles. So they were representing the C-suite, finance, IT, operations, compliance, marketing, sales, product management. So a well-rounded perspective to be sure. Okay, so let's just dive right in. And I want to start kind of at the center of the tech stack and look at some of the stats we collected about banks' core modernization plans in this survey. So in trying to assess where the industry might be on the core maturity curve, we found that while only a minority of banks have really started that modernization journey, about 4 in 10, most have a longer-term plan in place to modernize their core. So collectively, 2 out of 3 have completed or embarked on their journey or have plans in place to do so. What we also found is that banks with under 10 billion in assets are the least likely to be either in the process of modernizing their core or planning to do so. But even among that group, it was a significant 76% who are at least actively investigating options. So they either are somewhere along that path or are actively investigating options to update their core banking system. So there's a lot of activity there. Clay, core banking transformations often go beyond technology, right? They impact your strategy, your people, culture over an extended period of time. And in fact, roughly half of the respondents to this research told us that it generally takes between 1 to 3 years, 1 to 3 years, it's a pretty long time, to implement a next-gen core banking system at their organization. So given all the time and resources that are invested, what do you see as some of the key factors bank leaders should be thinking about to successfully address not only the technology side of this decision, but some of those larger organizational impacts on strategy and people and culture?
It's a great question, Janet. There are two big things that come to mind for me and for us as a financial institution. The first one for us was alignment. This can't just be a tech initiative. It needs to have alignment across a number of different cohorts. Certainly the technology function within a bank, but also within the entire senior leadership team of a bank, because it affects all of those different parts. And that extends very much to the board of directors as well. These things don't happen without some degree of risk and expense, as often there's a transition between a legacy provider and a new provider. But if you're taking a long-term perspective, it was an easy decision. And I think that alignment also has to fit in with the strategic plan of a bank. And if it's not called out in there and it's not prominent, it's hard to get the type of support you need, certainly from a strategic perspective, but also from a budgetary perspective. And as you're talking about it, it needs to be talked about in a transparent and consistent manner at every level, because it does affect a lot of people. And lastly, the other big category is willingness to accept change. And we talk a lot about continuous improvement throughout the bank, about products, about systems, about just how you go about doing your day-to-day business. And if you're talking about that, it makes a core change like this, in our view, easier to do.
So it's about having a plan, committing to the plan, being willing to be a little flexible along the way, telling everyone about that plan, and really making sure you have representation across the whole organization. Really great advice. Chad, I think another thing that we saw here was that 4 out of 10 banking leaders we surveyed said that their organization is at least somewhat likely to switch their primary core banking platform when their contract expires. And that was a propensity that jumped to 6 out of 10 for larger global and national banks. So what do you see as some of the potential unmet needs, I guess, that might be contributing to a willingness to move to a new platform?
Yeah, it's a great question. I mean, I think that organizations historically have seen the benefit of moving to the cloud in the creation of digital experiences and driving modern experiences to customers. But I think they've often been reluctant to invest in their core platform in the same way, just due to the size of the investment, as Clay mentioned, the complexity, the risk, because you are changing such a foundational component. However, the complexity of delivering those next generation products and services to customers is a big driver in the way that you think about a new core platform as well. And so you're starting to see firms realize that in order to really have a digital modernization strategy, it's really not complete if you don't also have a core modernization strategy with it, because you need to be able to look at that value creation end to end.
Okay, thank you. And I guess, Brad, that kind of leads me to a question that I think relates to that for you, which this data suggests that core banking transformation initiatives are top of mind for a majority of bankers, but it also highlights that more than half of those planning to update their core banking systems, or at least actively investigating doing so, have not yet selected a vendor for that core banking transformation, right? So we just talked to Chad about how some of them are indicating a willingness to look at new vendors, and a lot of them are still undecided going into this planning process. So what are some of the things that you would advise those banks to think about as they look to shortlist technology partners who might be a good fit for their modernization efforts?
Sure. Thanks, Janet. I think first off, as Clay said, I think a bank needs to be thinking long-term and how their core serves as a foundational strategic asset to achieving that true sustainable transformation for the long haul. You don't want a core system to be a bottleneck to transformation and innovation. So there are a few key aspects to that. First, I'd look for a truly cloud-native solution. I know this term is getting a bit long in the tooth, and a lot of vendors say they are cloud-native, but it shouldn't be overlooked or taken for granted. And by cloud-native, I mean not one that simply runs on the cloud, but is truly built in and for the cloud from the ground up, meaning no legacy pre-cloud technology, API-first microservices architecture, to really truly enjoy all the benefits of cloud, of scalability, reliability, resiliency, security. The second thing I recommend is looking into how much flexibility and configurability the core platform truly offers, and does it really enable the bank to be nimble and agile and give the bank control to do pretty much anything, and without having to involve the vendor. Particularly with regard to control over the product development process and roadmap, and the ability to launch innovative new products quickly and get to market fast. A bank should consider if the platform gives them the flexibility to blend products. So a checking and a savings account together, for example, versus forcing a bank to continue to work in sort of product silos when launching new products. Does it allow you to create new products easily that, in terms of new products, but also offer the ability to replicate complex existing products or legacy products within the new platform? This replication of complex legacy products is something I think a lot of banks, they take for granted or may not think about. They just have the assumption it can't be done. Third, assuming a bank wants its core system to be foundational part of its overall data strategy, it needs to consider if the new core gives the bank the ability to access real-time data to which it can apply modern data analytics and machine learning, et cetera, to build truly differentiated offerings. And then lastly, a bank should really look at the ecosystem that surrounds the core provider. Does it include best-in-breed tech vendor integrations? Does it include consulting and delivery partners with expert skills in that platform?
That's great. And, it's interesting because a lot of the things that you just checked off on that list for people to think about really align really well with some of the drivers that we are seeing behind these core banking modernization efforts. So for most banks that we spoke to, the commitment to modernize the core is really driven most often by a desire to do many of the things you just talked about, to be able to respond to customer and market demands more quickly, followed by having better data security and control, and of course, real-time access to data. So I'm going to start with you again, Brad, because I'd like to sort of get your view of the landscape, and what do you see as some of the biggest changes in customer behavior or the competitive landscape that are really motivating banks to make the investment in next-gen core?
Yeah, I mean, this has been heavily documented over the last couple of years, last year in particular, but there's been significant change in both. On the customer front, there's been a profound and probably permanent shift in customer behavior over the last handful of years, and certainly accelerated by the COVID pandemic. Customers have become accustomed to hyper-personalized, 24/7, engaging, digital-only real-time experiences. And they already get this with every app and digital service they interact with daily. So naturally, they're increasingly expecting the same sort of experience with their banks. So they value remote, on-demand customer service versus in-branch face-to-face integration. So as we all know, banks can't just sit back and passively wait for customers to walk into the branch to engage with them. And they expect things like instant credit decisioning and new ways of borrowing and spending money and simple onboarding, creative rewards and no fees, that sort of unique personalized experience. So along with this change in behavior has been this explosive growth in non-banks, digital-only banks, and fintechs to come try to meet this demand. And it's also obviously creating some demand. But it's certainly creating some competitive pressure on the banks. In the U.S., we're starting to truly see mass adoption of fintech and digital bank and non-bank solutions. And I recently heard an interesting point that I think it was on a Breaking Banks podcast recently, that there are more users of fintech apps in the U.S. than there are users of Netflix, which I thought was pretty telling of how mainstream it's becoming. We've got, it depends on what data source you believe, but there are 9,000 to 10,000 fintechs in the U.S. Fintechs, non-bank financials, including digital banks, and this number is increasing, 500 or so a year, with a heavy concentration in lending and wealth and payments and insurance, and funding's going through the roof for these companies year over year. So it's not just a fad. These upstarts are gunning for pieces of a bank's traditional business. And then you certainly have the big banks, the big tech companies, the Walmarts, the Amazons and Googles, and the non-techs like the Walmarts, who just proved it by the acquisition of and even two fintechs, that they're getting into the game of launching financial service offerings. So just a lot of headwinds for the banks in that competitive sector.
Yeah, it's interesting. We did a piece of research last year on humanizing the customer experience in banking. And one of the outputs from that research was we surveyed 10,000 U.S. financial consumers. And one of the outputs was ranking the financial institutions and regular retail banks, credit unions, challengers, online-only banks that provide the best customer experience in this kind of new landscape. And in the top 10 were 2 challenger banks. So kind of just underscoring that convergence that's happening across the industry, right? And sort of what consumers view as a bank. Maybe their definition of banking is changing a little.
Right.
But Clay, I think another interesting thing we saw is that when we looked at this data by institutional asset level, we found that for banks with 10 billion to 49 billion in assets, so sort of mid-range banks, the ability to more easily respond to changes in compliance and regulatory requirements was actually the #1 driver. So not speed in reacting to customer or market demands. And in fact, about 42% of respondents from those banks chose that as the top driver, which was 2 times more than their peers in either lower or higher asset ranges. So definitely higher up on their list for them. Do you have an opinion on what you think might be contributing to the focus on regulation as a core modernization driver among that segment of banks?
I do. And just to be clear, we're in the under 10 billion cohort. So I don't know that I would have answered the question in the same way, but I think it does apply to banks our size as well. And generally speaking, banks over 10 billion, the regulatory oversight grows considerably. But I think a big part of the reason is not dissimilar from the reasons that we want to have more flexibility to offer new products and services in a faster manner than we currently do. And a lot of that, for example, when we look at regulatory changes that are coming down the pike toward us, either from different states where we operate or from the federal government and regulatory bodies, we often ask ourselves, okay, how do we actually comply with this? How do we report those data? And as Brad was describing, it's not easy to get data out of a traditional core all the time and in the way in which you need to access it, either for analyzing those data to understand your customer better or for analyzing it and slicing and dicing in a manner in which you can report it to regulatory agencies. And so I think that to us is one of the things that we see. And we certainly know that over the past 10 years, there's been great change in regulation, and there'll continue to be great change. And we need to be nimble enough as institutions to respond to that when those questions are asked of us.
Great, thank you. And I think that kind of, another point I'd like to talk about here is about open banking, because that ranked a little bit lower on the list of primary reasons for modernizing the core. It was listed here at 24%. Yet it really is a priority for many banks, particularly larger global and national banks. In this particular survey, we saw that 3 out of 4 global national bank respondents reported that they've already embarked on the journey to provide open banking capabilities. So really higher among that segment. So Chad, how do you see open banking, embedded banking, and banking as a service kinds of solutions factoring into core modernization plans?
Yeah, when you look at banking as a service, open banking and embedded banking, they all share some common characteristics in the management of third-party experiences and being able to integrate the bank into those experiences, but you do it in different ways. And for something like open banking is something that you may be able to extend off of your existing core in a very limited way. But in order to really gain the full value out of things like open banking, banking as a service, and embedded banking, you've got to be able to look at those processes end to end. And that really is where, when you're building a new next generation core, you have some value opportunities to really kind of look at the scale of those processes and the scale of those platforms to be able to support an extended set of third parties. At Chase, we want to be in ecosystems that are outside of the walls, of our bank. We want to be where our customers are and be able to help facilitate our customer needs, but we want to make sure we do it with the right level of security, with the right level of scale, with the right level of quality as well. And so it's important that when you think about the processes, you don't just think about the external connection to that third party, but the end-to-end process and how you scale up risk, fraud, operations processes as well. And when you're building a new core, this really allows for institutions to kind of reimagine those processes end to end to really get the best benefit out of that operating model. And large organizations such as Chase can benefit from that experience and managing the scale, but quite frankly, all organizations, no matter the size, benefit from those simplified and scalable processes.
Absolutely. Thank you. Well, I think another interesting thing to come out of this research is that there's a lot of interest in being more agile and responsive. That's a key driver for core banking modernization initiatives. But what we also see is that expectations on that front are quite high. And by that, I mean that we can see on these charts that roughly 9 out of 10 banking leaders surveyed expect that these next-gen core banking systems will increase their speed to market with new products. And in fact, almost half expect that improvement to be very significant. And we also see expectations around the impact of next-gen core systems on operational efficiencies to be just as high, particularly among the largest banks, who were 2 times as likely as the smaller ones to expect a very significant improvement in operational efficiencies from those next-gen core investments. So I want to kind of pose the same question to all 3 of you, and I'll let you guys take it in turn if you have an opinion, but I'd like to know overall what your thoughts are on these findings and if you find those expectations to be realistic. And then what should banks be thinking about as they plan these initiatives to make sure they get the return that they expected? So maybe here, I don't know, Clay, would you like to go first?
Sure. I think there's some similarities here, regardless of size, that we do have expectations of increased efficiency. And we do have expectations of speed to market. And we need, again, regardless of size, to be able to respond to what our customers' needs are. And if it really does start with the core and the access to the data, and it builds out from there. And I think that we want to remain relevant to our customers and provide us with the flexibility to serve whatever those needs are. And it can be difficult because in the case of many community banks, you're really beholden to the ability to access the data, and B, to many of the services that go along with the core providers that may not be as relevant in a year as they were 3 years ago. And being able to have, and this gets back to the open banking piece, have the flexibility to assign best in breed or affiliate with best in breed services is really gets to the point of speed to market with some of these things and agility. And I think a whole host of other things. And just, as an example, right now with traditional core providers, if you want to custodian cryptocurrency just as one thing, that's hard to do because they're just not set up for that. And so until you have the ability to kind of really determine your own future a little bit more, I think it's going to be hard to keep up with the speed of what's happening within the marketplace, both with very large financial institutions, the Amazon, Googles of the world, and then fintechs that are really set up not as partners to banks, but to competitors or alternatives to banks.
Yes, Brad or Chad, do you guys want to comment on that?
Yeah, I'll just make mention of a couple of things. One, I definitely agree. I think that, anyone investing in a core is expecting to get those types of operational efficiencies. The investment is high, the time and complexity is there, and you want to make sure that you get that full benefit. I think that you have to be careful, though, to only assume that you're going to get that benefit just from having the new core is not going to get the full benefit of that operating model if you don't build the right practices around that execution. And what I mean by that is, really having an organization that is very much agile driven in the way that it drives everything, the way that it deploys applications in the clouds, the way that it takes its product lifecycle management in a way that you can make small modular changes on a frequent basis with the right level of quality and control and the management of risk. You want those end-to-end processes to be very efficient. And I think to Clay's point, it does start at the core, and it starts with having a real-time core banking platform that you can stream data out in the right way. But you've got to make sure that that is connected end to end for the value of the customer so that you're continually making those changes. And I think a couple of things that we have done at Chase is that we have organized ourselves in products where we're continually connected to the customer in many different platforms and products against that end-to-end journey. And we're allowing ourselves with a high level of automation to be able to make changes on a frequent basis end to end. But as you build a next generation core, incorporating that into those processes is critical so that you get the full benefit of the operating model. And, I think that the last thing is just not always is it lower cost. In some cases, it may even be higher cost, but better operational efficiency in process and in execution. And so cost shouldn't always be the driver, but the speed and the value that you bring to your customers.
Yeah, I'll just add, I couldn't agree more with what Chad was just saying. I will harp on the costing a little bit. I mean, first of all, I do think the expectations of faster speed to market and improved op efficiency is very realistic. We did do, obviously the cost of maintaining mainframes are massive parts of a bank's IT budget. But we did conduct a study with Bain, one of our close partners last year, around cost optimization and improvement with a modern cloud native core. And in Bain's study, it was found that cost improvement, that can be achieved with a modern core is about 60 to 70% lower than a legacy core. And there's a lot of factors that contribute to that. It's not just cloud. Yeah, but it's all the things around having the modern tech stack that the core enables you to build around it, and the low cost of change in products, and reduce run costs, and reduce maintenance, reduce tech debt, and all the efficiencies that come with having that API first architecture around the development team. So, yeah.
Okay. Well, there's certainly a lot at stake, right? And we wanted to kind of poke at that a little bit to see what some of those roadblocks are that banking leaders are worried about that might stall progress or delay realization of all of those business benefits that we just talked about. At the top of the list, what we saw is that challenges integrating external systems and products were number one, followed by budget constraints, which is often a reality. But to your point, Brad, there's some real cost advantages to moving in this direction. And then if you follow along, there's talent shortages are still top of mind, and regulatory compliance concerns. And what we saw with talent is that is a particular challenge for regional banks and credit unions. And if you just focus on global and national banks, they're more often struggling with regulatory compliance challenges. So I'm going to start with Brad on this one and just kind of generally ask, do these results surprise you? Anything missing here? Anything you didn't expect?
I mean, the regulatory compliance concern is not surprising. Clay touched on it. Chad touched on it. Certainly a hot button issue in the U.S. But frankly, I think it's partially due to a lack of understanding or awareness of how a modern core platform can actually enable a bank to more easily achieve and maintain regulatory compliance through both product configurability and access to the real-time 100% accurate data for reporting purposes. Talent shortage issue does not surprise me. When you're dealing with a legacy core for decades, you're likely going to have lack the cloud skills and modern programming language skills, et cetera, that surround it. What mostly surprised me, though, that's missing is migration. The fact that that's not towards the top of the list, or I didn't even see it on the list, unless it's somehow kind of captured in implementation part of the response. But regardless, it's still low on the list. And for us at Thought Machine, most banks we speak with, migration is always one of the top things we get asked about. And obviously, it just depends on what the bank's doing. And maybe they're spinning up a digital greenfield. It's less an issue. But but we're always asked about in terms of best approach and how to do it and what tools and methodologies we provide to enable it. So I was surprised that that wasn't on the list.
That's a good call out. And Chad, integration was right at the top of the list, integration with external systems and products. So where do you see those challenges being most acute? Or I guess more specifically, what kinds of external systems and products are most commonly pain points for banks? And what's the long-term risk to the business if that integration challenge is left unresolved?
Yeah, it may be that, Brad, that the migration cost is also part of the integration as well, which is very high on the list. But some of the biggest challenges, involve integrating a new core with many, many upstream and downstream platforms and products to deliver that overall customer value. I mean, you're literally changing the foundation of the bank, and when you do, you're changing everything that interacts with a core, which is most of your bank processes today. And so this could include digital experiences, middleware platforms, risk and fraud, or even back-end systems like accounting and data analytics. So when you're modernizing a core, if you don't consider the design of those processes end-to-end from the customer experience, you may not get the full benefit from that modernization. So if left unresolved, that could result in negative customer experiences or introduction of risk, or not getting the full benefit of speed, scale, innovation, or operational cost. And so, by not changing those legacy processes, you're also creating domain expertise and talent risk over time as well, because you're dependent upon processes around the core that may also need to be modernized as well. So it's really important that when you're changing that foundation and you're looking at the integration, that you really rethink those processes end to end to get the full benefit of this next generation platform. And that is hard and that is difficult. And that's why it doesn't surprise me that that's one of the top items on this list.
Yeah, and the ripple that you mentioned through like your talent is an important one. And Clay, I'd love to get your opinion on that, because have you seen the talent shortage become significantly more challenging in the wake of what we're all been talking about recently with the Great Resignation? And if so, how are you dealing with that at your own institution to ensure that your modernization efforts are well supported?
So I think if I try to get underneath the response to talent shortage, I think Great Resignation, it could be part of it. But historically speaking, most community banks don't have a lot of in-house technology, bandwidth, certainly development skills, or really thought leadership, because something I referred to earlier is they've really relied externally on their core providers to do all that thinking for them. And so when you're starting to go down this path of how do we modernize, whether we start doing more cloud-based work or whether we start going toward more fintechs, you need to have that talent in-house to help you think that through. And I think that's probably what the response there is based on. As it relates to the Great Resignation, it's a huge reshuffling of the ability to attract talent. And I think in the case of community banks or employers of any size, the ability to kind of find people and bring them in to work with you is greater now, because they can be anywhere if you embrace that type of approach. For us, it's actually been helpful. We have embraced remote and hybrid. People are 2.5 more times as likely to apply to jobs now that allow for that, and as opposed to requiring people to be on-prem. And as it relates to technology, good technologists want to work with good technology. So if you invest in having good platforms that are modern, you're going to attract people who want to work with those tools. And I think in our case, people want purpose, and it's helped us as an institution that is very purpose-driven. We're a certified B Corporation, which is unusual in financial services. But I think that we're finding those things in the Great Resignation are resonating as well. So again, the big thing, however, for community banks, I think, is that they've just really not had to make decisions or explorations like this before.
Yeah, that's really interesting. Chad, do you have anything else to add to that from your perspective around the talent challenge?
Yeah, I think on our side, we do have a lot of talent in-house that have been developing core technologies, for some time. And there's a lot of deep domain expertise that those people have that we want to make sure that we retain that domain knowledge. We want to retain that. We want to move them to the new skills of a next generation platform as well. So for us, it is twofold. It is retaining that talent, uplifting and upskilling that talent into new capabilities, but then it's also attracting the new cloud skills that we need to be able to drive a next generation platform and build the future of the bank as well. So we really look at it from both sides as, how do we take the workforce that we have today, get them modernized, but also leverage that deep domain expertise and invest in bringing in more cloud expertise into building these next generation platforms.
I guess, and to Clay's point, the fact that you can now recruit talent from a much wider geographic footprint probably helps as well. It's interesting.
It definitely widens the net that you're able to go after, that's for sure.
Yeah, absolutely. Well, with so much at stake, I forgot to move this forward. I think we've learned a lot in our discussion so far. You guys have brought up a lot of great points about how and why banks are prioritizing core banking modernization efforts. And certainly the benefits that we've been discussing are driving broader digital transformation efforts in banking, a desire to drive business growth and improve the customer experience, minimize risk and increase operational efficiencies. So let's shift gears a bit and explore where core modernization sits within most banks' digital transformation strategies and what else is shaping those strategies. So for instance, where are banks' efforts being focused in the race to digitally transform and create more value for the business? So overall, the data collected shows that the elements most often included in digital transformation strategies are digital product development, process reengineering to drive operational efficiencies, and then implementation of AI and data analytics technologies. And core banking system upgrades make the list for just 56% of respondents, while cloud migration is mentioned by fewer than half. So I guess my first question would be both for Clay and Chad, and we can start with Clay, but I'd like to kind of understand how these results map with elements that you might be including in your own organization's digital transformation strategy. So what are some of the elements that you guys are thinking about as you go through this process?
So Janet, when I look at the results of that graph there, it's the things on the left, the digital product development, the efficiencies, being able to implement AI or data analytics. Those are the goals, and the means to those, the end, are really open banking, cloud migration, banking as a service, is integrating with other things, which is really what this type of core transformation we're talking about will afford and be able to happen. So really digital product development is huge for us. As an institution, we've been operating in various levels of cloud environments for years. In fact, even before I was a member of management, I was on the board externally, I was the person during budget season asking, like, why are we spending so much on hardware when this isn't what we're best at? We need to have others who are expert at this be doing it for us for any number of reasons: cost, security, personnel. And I think the cloud native system, you are going to be better able to access these customer data, to gain insight, to do more AI. And it's one of those things, until you really have access to those data in a meaningful way, you're not going to be able to know your customer as well as you should. Or you're not going to be able to access and help them as much as you should. And I think similarly to native cloud technology, and Brad mentioned this very early on, is that it can't just be in the cloud, but it has to be technology that is built to operate in the cloud and be scalable, be fast, and be secure. And I think that that's what some of this next generation of technology is allowing us to do, and allowing financial institutions of the size of we are, below 10 billion, to be able to have these same tools that are available to us.
Yeah, I mean, I wonder, do you think that we're moving enough of the workloads to the cloud fast enough? I don't know if either of you or any of the three of you saw the recent article that came out that was from an analyst firm that said, only 12 to 14% of U.S. banks' workloads are sitting in the cloud right now. I don't know if that surprises you guys, or if you would have expected that number to be higher.
I just think that when you see, the digital transformation, which is kind of tied with your digital product development, it has been heavily centered around driving digital experiences into the cloud to really be able to get speed and value of modern experiences and modern capabilities. But similar to the slide that you had in the very beginning, there has been that reluctance to say that we're moving our core to the cloud as well. And I think that is where, the points that Clay, was making and Brad earlier is that you've got to build a platform that is built for the cloud to take full advantage of cloud capabilities. And so those things that are over there on the right, to Clay's point, these are enablers that really will drive the right level of digital product development. And I think organizations have invested, in the peripherals, historically, in some cases, but now we're looking at investing, end to end and really making that experience drive in a modern way to fully take advantage of the cloud, for that value of product development. So I think you'll start to see those numbers shift because it becomes just an embedded part of digital product development, not something that you look at separately. But it is key, I think, to do it in the right way.
Yeah, and Brad, I think, looking at this list of things that people are thinking about as parts of their digital transformation strategy, were you surprised that core banking and cloud migration didn't rank higher on the list? And do you think it's a missed opportunity?
Yeah, definitely missed opportunity. I'm very biased working for both Thought Machine and then coming out of AWS for a decade. Both these things hit a nerve with me, and I'm not going to reveal anything profound that the others two haven't. It's just without doing those two things, it's like building a house without first pouring the foundation. They just go hand in hand. It's just part of foundational transformation. So I don't know how they could be at the top of the list. It might have just been an interpretation of the question. I'm not sure, but it goes way beyond digital transformation. Goes way beyond just building an app. It's re-architecting underlying systems, infrastructure, changing behavior, engineering principles, everything that we've talked about. So very surprised by the results.
I think that's fair. And a good point. So let's talk about cloud native and core. We talked about this a little bit earlier, but I think it's good to sort of revisit it in a little more detail here. So I think notably when it comes specifically to core banking systems, 2 out of 3 banks surveyed are telling us they have systems in place that rely at least partially on the cloud. And just over half report that their next-gen core banking platform will be cloud native. For global and national banks, 3 out of 4 expect to adopt a cloud native next-gen core banking system. So that number goes up from about 55% who think their next-gen banking system will be cloud native to 73% among those largest banks. So Chad, I'm going to start with you. What are your thoughts on the different approaches banks are signaling they're taking to migrate their core banking systems to the cloud?
Yeah, and looking at the survey data, it's not surprising to see that there are varying approaches that people have taken to core migrations. Just depending upon their modernization strategy, some organizations may choose to invest in a new core by creating a digital layer to wrap around their legacy processes to improve the customer experience, or by moving selective processes to the cloud in order to get the speed and benefit of the cloud. That gets you so much. And at Chase, we've really been on this modernization journey for quite some time. And we see the direct benefits of the cloud in all aspects of those end-to-end processes. So it's important for us to really think about the core as a greenfield strategy of how you're really bringing those processes end-to-end to customers. That also helps you deal with the management of risk, the management of integration, and really rethinking what those processes should be to be able to create the next generation of products and services, not just making a more efficient view of the existing products and services that you have.
Right, absolutely. Absolutely. Moving past that into truly innovative sort of new ground, right? Clay, regional and community banks were the ones who seemed the most undecided about whether or not they would adopt a cloud native core banking system in the future. I think that was about a third who said they were unsure. What do you think might be driving that uncertainty?
I think as a cohort, we as community banks, particularly in the sub 10 billion, are rather conservative in our approach to things and perhaps not as quick to be a first mover. I think that's driving a lot of it, and that's just cultural more than it is anything. It's a, and again, I get back to something I referenced before, is that not all banks at that size cohort have a lot of in-house technology talent that can help chart that path forward to move into a cloud-based or a native cloud technology-based series of environments. And that's because they've relied very heavily on outside vendors to do that thinking for them and provide those services historically, and which are really mainframe-based for the most part. Like, for example, when I arrived here at Mascoma Bank, the person leading technology, which was really infrastructure, was several layers down in the organizational structure from me. And now we have a chief technology officer who's on our senior team, and we didn't have any developers on staff. And until you start to develop that muscle group, it's sometimes hard to think about these changes. And I think that if you don't have it, it's a level of discomfort and unfamiliarity that really takes a jump to get to. And I think that may, however, come at the expense of long-term relevance for certain institutions who choose not to go that direction.
Good points. Thank you so much. Brad, before we open this up to questions from the audience, do you have any final thoughts?
I mean, it's just such early days with regard to digital transformation and core modernization. And it's just such a big problem that so many banks need to address, obviously. And but there's still such a big gap, between what customers want and what banks can deliver. So it's going to be really exciting to see how banks transform over the coming years.
I agree. There's a lot of change happening on the horizon, and it is really exciting. It's an exciting time to be in financial services. Thank you all, Brad, Clay, and Chad. You've all provided a ton of great insights on how banks can build more achievable and sustainable digital transformation strategies. We've got a few more minutes, so I'm just going to see if we can take a couple of questions from the audience. Our first one here is talking about multi-cloud, and more specifically, how important do you think a multi-cloud strategy is in the banking modernization journey in the near term versus the long term? Someone want to tackle that one? Maybe Brad?
I
Not to put you on the spot.
No. It's a good question. I mean, I'm very interested in hearing the banker's view on this. I mean, my quick view is one of caution with multi-cloud. I get it. Multi-cloud is becoming increasingly popular. There was a point in time it just wasn't as popular. But I think one of the risks you encounter with going multi-cloud is you tend to have to architect to the lowest common denominator. So if one platform can do one thing great and the next platform can do it so great, then you got to go so great. So that's just a risk that banks have to think about. But I'm very interested in hearing if Chad or Clay.
Yeah, what I would say is that we want to develop processes that where they can be cloud agnostic, so that we're thinking that we're building something that has the right portability, the right scalability when we develop. But we also want to take full advantage of the cloud and the values that it creates. And so this isn't always one decision or the other. It's something that you really have to look at and make sure that you're putting the right workloads in the right cloud, because there could be different decisions that are driving that, whether it's performance, whether it's latency, whether it's regulation. And so you want to be very intentional about having processes that can scale, but whether you choose to really go multi-cloud because there's value towards that, I think that's a case-by-case decision.
And I would just add that the concept is appealing from a redundancy, from a resiliency perspective. It does come down to, I think, expertise, the ability of the technologies to scale and adapt to those different environments, and then our bandwidth and in-house ability to service those things. And so it may be something that right out of the gate we're not looking at, but I could see down the road as those things become more accessible to us as institutions, it could be very appealing.
Great, thank you. This is a little bit more of a crystal ball kind of question, but maybe one that Clay or Chad might want to take a stab at answering. But our audience member is asking, is the mainframe going away? What do you guys think about that? Where do you think the role of the mainframe and on-prem solutions is going to be in the mix long term?
I mean, the mainframe is still very heavily used in the industry today. It has been a very reliable, platform that has continued to drive some of the largest workloads, in the industry. And, that continues to be a space that, is showing, great maturity when it comes to performance and stability and reliability. At the same time, you want to be able to take full advantage of where the industry is moving in terms of cloud and cloud delivery as well. And so, for us, looking at making sure that we're building a platform that is going to continue to be able to meet the modern skills of today and the modern delivery of tomorrow, we've got to make sure that we're investing in the cloud. And Chase has been doing that for some time and will continue to do so. So, I think the mainframe definitely has a lot of value, but at the same time, we've got to build for the future and make sure that we're taking full advantage of cloud and cloud skills.
Thank you.
I think Chad covered it well. I mean, I wouldn't bet against the mainframe. It's been around for decades. It's been a workhorse in the industry. And I think we need to build for the future as well. And I do think in part of your question was about other types of on-prem kind of servers. And I think those may be going away as we could outsource other things that may be unrelated to core banking to a cloud environment. And that is a different type of decision as opposed to kind of moving mainframe. We as an institution don't have mainframe on site. It's our core provider provides those services in a much more scaled environment. But I think that other servers we have already been pushed out to the cloud.
Janet, just lastly on the mainframe point, I think we talked about it earlier about talent. So just if we continue to run a talent shortage and having that programming skills ability to keep up with the mainframe, and that could itself drive the end of it. But I tend to agree with Chad. It's got a long life left.
Okay, so it's not the death knell yet. We are moving. It's still going to be an important part of the mix. So thank you for at the end of our time today. But I want to thank all three of you again for joining us today. To Clay from Mascoma Bank, from Chad from JP Morgan Chase, and of course to Brad from our sponsor Thought Machine for partnering with us on the research and sponsoring today's webinar. If you have additional questions or you want more information about how Thought Machine can help your business, you can email them at the address here on the screen, which is marketing@thoughtmachine.net, or you can visit their website at www.thoughtmachine.net. Again, thanks for joining us. We hope you enjoyed it and got some useful information out of it. Have a great day.